The next speaker who I will be calling on stage is the Honourable Jyoti Jeetun, who is the Minister of Financial Services and Economic Planning from Mauritius. Doctor, over to you.
Not many people around. It's always interesting in these sessions. More people outside doing business deals than, wanting to listen to a speech, which is very normal. Excellencies, leaders, investors, members of the Mauritian delegation present here today, ladies and gentlemen, a very good morning to you all, and thank you for taking the time to join us today. I'm really very pleased to be with you today to discuss how we can harness the undeniable potential of the African continent, especially how we can mobilize more investment. Let me begin with a shared understanding. All African countries are on a journey of economic development. We may be at different stages, but there is a shared vision of achieving economic prosperity and inclusion through collaboration. We can learn from each other as we share experiences, both in terms of what has worked and what has not worked as well. Collaboration is necessary. We need more Pan-African collaboration, but we also need to strengthen trade and investment with our partners from outside of the continent. And this is the very essence of why we are here today, to discuss how we can strengthen existing partnerships and develop new ones. I will focus my remarks today on three themes. First, why the context within which we are meeting matters. Second, the evolution of the Mauritian economy. And third, why Mauritius can provide a financial platform to channel investments into Africa. Let me take these in turn, starting with the context. I want to take a moment for us to understand where we are and why this has added significance for our conversation. 10 years ago, we were talking about Africa rising and the African century, a wave of optimism reflecting the continent's youthful population, a sustained period of strong growth and economic stability, and the gradual integration of the continent in global trade. Capital flows were at all-time highs. 10 years later, today, we are dealing with the legacy of COVID, geopolitical fragmentation, and headwinds to global trade. Aid flows are on a declining trend, debt levels remain elevated, and many countries are not only regaining access to market now. While financing conditions remain tight, financing needs are higher than ever. With governments constrained in their ability to borrow, the bulk of our investment will need to come from the private sector. And the continent's potential remains undeniable. The population will more than double from the current level to exceed 3 billion. Yes, that's the population of China and India put together. In a context of global aging, more than a third of the world's workforce will be from Africa by the end of the century. Investment opportunities abound on the continent. All our countries need financing for development and building resilience. What we need is creating an environment that is conducive to mobilizing and intermediating such flows across the continent. More importantly, we need to increase the returns to investing. It may sound simplistic, but return on investment is often the main yardstick for many investors. Let me now turn to my second point on how Mauritius is charting its development vision and the investment opportunities this is creating. The development journey of Mauritius since independence from a monocrop sugar economy to one that is also driven by manufacturing, tourism, financial services, and ICT is well known. In the process, income per capita has increased to nearly $12,000. Some analysts suggest Mauritius is small, and so it was easy to chart a development strategy. That is probably not the not the case. We were intentional in everything we did. Today, we are setting the base for our transition from a middle income to a high income country. We see artificial intelligence, the blue economy, green and biotechnologies, and fintech as the emerging sectors. This will enable Mauritius to benefit from more R&D, innovation, and create new drivers of growth. We continue to see our integration in global chains, trade and finance as an opportunity to overcome smallness. Our transition to a high-income economy is creating new investment opportunities. Mauritius is open for business. We have a long-established tradition of working with the private sector, domestic and foreign investors. Over the years, the Mauritius brand has developed around political and macroeconomic stability, policy predictability, and a willingness to take a bet on emerging sectors by putting in place fiscal and non-fiscal incentives complemented with regulatory frameworks conducive to private sector investment. Let me talk briefly about our fiscal regime. Mauritius has no capital gains tax, no withholding tax on dividends and interest, and no restriction on repatriation of profits, dividend, and capital. Moreover, there is no estate tax, inheritance tax, or wealth tax. These incentives make Mauritius an attractive investment destination and also an appealing jurisdiction for structuring investment into other countries. And I want to delve on our financial services for a moment. The financial services sector now accounts for nearly 25% of our GDP directly and indirectly. The Mauritius IFC is a brand that we have developed over 3 decades. We are among the leading investment platform for many countries across Africa and Asia. The Mauritian IFC is a well-regulated and transparent jurisdiction when it comes to facilitating cross-border investment. Our geographic location, cultural connection, network of bilateral agreements, and above all, a sound and agile regulatory framework makes us a trusted and secure place for business to take place. Strong collaboration with global regulatory institutions has been critical in building the Mauritius IFC. We are now laying the foundation for the next stage of our financial services sector development. Our recently published financial services sector strategy is articulated around furthering our competitiveness as a financial jurisdiction, increasing the financial products we offer, and enhancing our global brand as an IFC. Strengthening and partnership with African countries is at the core of this strategy. We ambition to become the leading IFC for investment flows between Africa and Asia. And this allows me to turn to my third and final point. How can Mauritius further strengthen its bond within Africa? Earlier I mentioned about returns to investment. All countries have opportunities for investment in roads, housing, water, electricity, renewables, airports, railways, agriculture, you name it. Yet, notwithstanding the opportunities galore, investment on the continent remains low, including when compared to peers in other regions. There are various factors that explain this unfortunate state of affairs, but also it boils down to risk and returns. Perceived risks are high, cost of doing business is high, and perceived returns are low. And this is where Mauritius IFC can support de-risking, increase access to capital, reduce the cost of capital, and facilitate greater resource mobilization. In fact, Mauritius is helping FDI flows in African countries already. Many countries in the continent are benefiting from the use of Mauritius IFC delivering value to investors. And I would like to point 5 items in terms of our value proposition. First, investing through Mauritius is more secure. Our network of treaties help with making investment more secure and increase overall returns. The double taxation avoidance treaties enable investors to benefit from a lower tax by channeling investments through Mauritius. The Investment Promotion and Protection Agreements, IPPAs, reduce risk related to political risk and property rights, especially in the mining sector or in the context of public-private partnerships. We argue that when it comes to investments, the IPPAs are more impactful than the DTAs. Second, investing through Mauritius increases access to capital and reduces the cost of capital. As one of the 2 African countries with an investment grade status, the cost of issuing debt in Mauritius is cheaper and provide investors with clear comparator. And we are working very hard on safeguarding our investment grade. Investing through Mauritius provides investors with a strong and credible regulatory framework. Compliance to global standards set by the OECD and FATF is non-negotiable. And we are also working on ways to reduce the cost of compliance, including by leveraging digitalization. Mauritius has bolstered its efforts concerning AML-CFT, and it is the first African country to fully comply with all 40 FATF recommendations. Fourth, investing through Mauritius provides access to innovative instruments. Last week, Mauritius was officially designated to be the host country for the first African credit rating agency. See, for too long, Mauritius, our nations have been rated through lenses that may not reflect our ground realities, our local expertise, the socio-economic political and cultural dynamics of African countries. For too long, we have been assessed on methodologies that use uniform models that may not fit Africa's diverse economic structures. AFCRA will offer ratings that are not only contextually relevant, but also free from perceived bias. It will also rate local currency debt, providing investors with new comparators. AFCRA is a new pillar of Africa's financial architecture, and we have a framework supporting green bonds issuance, with some issuance already having taken place. Fifth, investing through Mauritius provides investors with a legislation supportive of risk-taking in emerging areas. The virtual asset and initial token offering services framework positions Mauritius as a leader in digital finance. It provides a secure, transparent, and flexible environment for investors exploring new frontiers like digital asset and blockchain technologies. The variable capital companies, VCCs, Acts brings added flexibility to fund structures, enabling investors to tailor their strategies to the unique demands of the African markets. We have a rising number of fintech startups specializing in blockchain, payment solutions, and digital banking platforms. We are working on streamlining licensing, providing regulatory support, and fostering innovation for fintech businesses, including RegTech, crowdfunding, and digital asset solutions. 6, we aim to establish Mauritius as a leader in the region in next-generation finance. And I will also add that last week, the GFCI index published its latest ranking, and Mauritius IFC jumped 6 ranks to be now 52 globally and first in Africa. And finally, let us not forget governance. Mauritius is reputed for world-class governance. This allows companies and funds registered in Mauritius to access financial capital easier. Friends, ladies and gentlemen, all the above reasons make us an ideal partner for family businesses, private equity firms, large corporates, and other investors looking to invest in Africa. We offer a unique gateway to the continent, providing access to a dynamic market ripe with opportunities for those who seek to diversify and grow their portfolios. I started my remarks today with the development journey we are on. It is one of shared prosperity. Mauritius may be the easternmost part of Africa, but our journey, as our history, is united. We are also the closest geographically with Asia, with very close ties, cultural and ancestral with countries like China and India. And we have strong historical ties with countries like the UK and France, in addition to Africa because of our history. So we are culturally at ease to do business with all these countries. We facilitate a lot of investment and trade flows between Asia, particularly India and China, and Africa. And in fact, many of you in the audience are already using Mauritius, and I thank you for that. Our team from the Economic Development Board, the Financial Services Commission, and many stakeholders from the private sector in Mauritius are present at AFSIC this week. We are here to help you to do further business from Mauritius into African countries. And my personal message to all our African brothers and sisters, my mission since I became Minister of Financial Services and Economic Planning in Mauritius is to grow and elevate our partnership with Africa. Let us renew our commitment to work together. And for those still thinking about investing in the continent, I invite you to visit us soon. Thank you very much.